See, before Ind AS 116, leases were accounted as per Ind AS 17. So an entity is required to transit from Ind AS 17 to Ind AS 116. And they are saying that you are supposed to apply Ind AS 116 from 1st April 2019. So application date will turn out to be 1st April 2019. Ind AS 17 was also leases. Under Ind AS 17, even a lessee was also segregating the lessees into finance lease, operating lease. But we now know that under Ind AS 116, that system has been discontinued in the books of the lessee. So the transitional requirements are going to be much heftier for a lessee. As far as a lessor is considered, under Ind AS 17, a lessor was classifying the leases into finance lease, operating lease. And even in Ind AS 116 also, you are supposed to classify it into finance lease, operating lease. So the transition work that is to be done by the lessor is slightly on a lighter side. So let us understand that how the transition shall be done first in the books of the lessee. As I said, lessee has a lot of work to do over here. You were classifying the leases as finance lease, operating lease under Ind AS 17, but that cannot be done under Ind AS 116. So how shall the transition take place? See, you are transiting from one accounting standard to another accounting standard. You know, when we change an accounting policy, when we change a simple accounting policy, we say you have to give effect retrospectively. If you change an accounting standard, then obviously that change also has to be given effect retrospectively. So if there is any lease which was previously classified as operating lease, previously classified means as per Ind AS 17, you have classified it at operating lease. Then what will be its transition? As I said, you have to give the effect retrospectively. When it comes to retrospective, Ind AS 116 is offering you two alternatives. Either you can go for full retrospective approach or you can go for modified retrospective approach. Full retrospective approach means you will argue that as if Ind AS 116 was been implemented right from the very beginning. If Ind AS 116 was implemented right from the very beginning, then what would have been its effect by the time you are transiting to Ind AS 116? Here there is an interesting point to be noted. What we are discussing is for full retrospective approach. Okay. Application date, as we are saying, Ind AS 116 is to be applied on 1st April 2019. So this will also have what is known as a transition date. Okay, transition date. Transition date will be 1st April 2018. Transition date means the date for which comparative information is to be provided. Agreed, I will apply Ind AS 116 from 1st April 2019, but when I prepare my books, I will show figures on 1st April 2019. I also have to show previous year information, as comparative. So transition date will become 1st April 2018. So just see. The way we will give effect of the full retrospective approach. The first thing, measure lease liability and ROU asset on commencement date of lease using incremental borrowing rate of lessee on the commencement date. Let us say you had entered into a lease transaction 5 years back. Then we are doing a full retrospective. So 5 years back, if you apply Ind AS 116, then what will be the lease liability? What will be the ROU asset? For this, I will require a discount rate. The discount rate should also be the incremental borrowing rate of lessee on the commencement date. So 5 years back, what would be your incremental rate of borrowing? Use that as your discount rate. Measure the lease liability, measure the ROU asset. So this I will do 5 years back. However, books are now not to be finalized 5 years back. Books are to be finalized now. So we have to now find out what are the balances of the lease liability and the ROU asset on the transition date. Transition date means 1st April 2018. So that's what they say. Difference between lease liability and ROU asset on the date of transition. Recognize that in the retained earnings. So 5 years back, you had entered into a lease arrangement. 5 years back, what is the ROU asset? 5 years back, what is the lease liability? Now bring down those asset and the liability to the transition date. So provide depreciation for the ROU asset. Prepare the financial liability repayment schedule that we prepare and find out what is the balance of the lease liability. So ROU asset on transition date, lease liability on the transition date. ROU asset account will be debited, lease liability account will be credited. And whatever difference is there, gain or loss, recognize that in the retained earnings. And because you are giving a fact on the transition date, you will have to restate the comparative information. So whatever comparative information was provided till now, you will have to restate it. You have to now move away from Ind AS 17 amounts to the Ind AS 116 amounts. So this is what you will do if you do a full retrospective approach. But see, there's a lot of calculations to be done over here. If a company wants to follow it really good, but then you may have entered into multiple lease arrangements, and for every lease arrangement, if I'm going for a full retrospective approach, there are a lot of calculations that are needed to be done. So a simpler approach has also been provided under Ind AS 116. That is what we are referring as the modified retrospective approach. What will you do in the modified retrospective approach? Okay. I had entered into a lease transaction 5 years back. Okay, 5 years back. But I'm now not interested in doing any calculations 5 years back. The total lease was for 7 years, let's say. Total lease was 7 years. 5 years have already got completed, so 2 years are left. I will do measurement only for the remaining 2 years. So, they are saying measure the lease liability based on the remaining lease payments using incremental borrowing rate on application date. Application date 1st April 2019. Ind AS 116 will be applied from 1st April 2019. Earlier we were saying that we had entered into a lease 5 years back. So 5 years back, what was the lease liability? Calculate that. Here we are saying that forget about when you had entered into the lease agreement. How many years are left? Liability is only for the remaining period. So recognize the liability only for the remaining period. Okay. Second, I have to now measure the ROU asset. For ROU asset, now two alternatives are given. Alternative one, I will again find out that, okay, what was the ROU asset 5 years back? Okay, 5 years back. But the discount rate will not be 5 years back. Discount rate will be on the application date. So, first alternative for ROU asset, since commencement date using incremental borrowing rate of lessee on application date, 1st April 2019. You had entered into a lease agreement 5 years back. So 5 years back, find out what was the ROU asset. But do not use the discount rate 5 years back. Discount rate should be the rate prevailing on the application date. Then provide depreciation and find out what is the ROU asset on the application date. Okay. And then again, ROU asset will be debited, lease liability will be credited, and the difference will be recognized in the retained earnings. That's what they say here, difference in retained earnings. Second alternative, even more simpler than this. These alternatives are for ROU asset. Alternative 1, alternative 2 is only for ROU asset. Lease liability will remain as it is. Second alternative, no need to do any commencement date accounting this time. We should make it equal to the lease liability. Whatever was the lease liability that you recorded, exactly the same will be the ROU asset, unless and until there are some other elements. If some other elements are there, you should be adjusting for it. Otherwise, ROU asset will be equal to the lease liability. In absence of any other element, ROU asset, lease liability, both will be equal. And if both are equal, nothing is to be adjusted in the retained earnings. Getting it? So these are the two approaches that we are having when it comes to recognition of the lease liability, lease asset. And yes, because you are not doing full retrospective, no restatement of comparative information is required. So any lease that you had earlier classified as an operating lease, you will now follow either full retrospective approach or a modified retrospective approach, and accordingly transit from Ind AS 17 to Ind AS 116. What if, as per Ind AS 17, I had classified as a lessee some lease as a finance lease? Okay, here also, first you can do full retrospective calculation. Okay, if this finance lease, right, which you have recorded as a finance lease, if this lease was accounted for as per Ind AS 116 right from the very beginning, what will be the balances? And accordingly, you have to find out the balances on the transition date, adjust the difference in the retained earnings, and restate all the comparative information. This is if you are going for the full retrospective approach. But what if I go for modified retrospective approach? If you go for modified retrospective approach, then what Ind AS 116 says is, do not do any calculations. Do not do any calculations. What is the amount of the lease liability? What is the amount of the asset? Consider them as the initial carrying amounts for Ind AS 116. You know, it becomes so simple. See, when you do finance lease accounting in the books of the lessee, then you have already incorporated the asset, you have also incorporated the liability following the principles of Ind AS 17. If you do not know Ind AS 17, do not worry. Consider accounting standard 19, right? Under accounting standard 19, a lessee, when it classifies a lease as a finance lease, it recognizes the asset and also recognizes the liability towards the lessor. So you already have balances of the ROU asset. You also have the balances of the lease liability. Just carry them forward. So they simply say that the lessee will not change, right? You will not make any changes. What is the balance of the asset as per Ind AS 17? That becomes the starting balance for Ind AS 116. What is the balance of the liability? That becomes the starting balance of the liability for Ind AS 116. So if you follow the modified retrospective approach, things will be much simpler. Okay, what about the transition for the lessor? See, not much is changing for the lessor, not much. Okay, lessor was earlier classifying leases into finance lease, operating lease. Under Ind AS 17, the lessor will continue that system even under Ind AS 116. Okay, so you are not supposed to make any adjustment. They are saying a lessor is not required to make any adjustments on transition unless and until you have entered into a sublease. Okay, if you are an intermediate lessor, then you have to make certain calculations. So A has entered into a lease with B, and then B has entered into a lease with C. This is what we consider as a sublease, and B will be considered to be an intermediate lessor, right? Intermediate lessor. Okay, earlier you must have followed Ind AS 17. Following Ind AS 17, you may have classified this as operating lease or finance lease. So this is what you must have already done. Okay, now we have to assess if you have classified as operating lease, if you have classified any lease as operating lease, again ask yourself that as per Ind AS 116, is it still an operating lease? Okay, you classified a sublease as operating lease as per Ind AS 17. Following the principles of Ind AS 116, is it still an operating lease? If it is still an operating lease, then no further adjustments are necessary. So they are saying that subleases that were classified as operating lease, you should apply the requirements of Ind AS 116. And on the basis of that, if the operating lease is still remaining an operating lease, then there are not much adjustments to be done. But it's quite possible that you had classified as an operating lease, but now it will be classified as a finance lease. If that is so, then the classification is changing. And if the classification is changing, you consider this as a new lease, as a fresh lease. Okay. So in A, they are saying, right, what we have discussed is basically the write-up that we have over here. We will say that you reassess the subleases that were classified as operating lease applying Ind AS 17 and are ongoing on the date of the initial application to determine whether each sublease should be classified as an operating lease or a finance lease applying Ind AS 116. You classified as operating lease under the earlier Ind AS, that is Ind AS 17. Is it still an operating lease? And for this, we know, we have discussed this in sublease also, we have to consider the lease term of the ROU asset and not the underlying asset. And accordingly, the classification will be done. If operating lease remains operating lease, no problem. But what if you had classified something as operating lease under Ind AS 17, but it is finance lease under Ind AS 116? Then consider this as a fresh lease. That's B. For subleases that were classified as operating lease applying Ind AS 17 but finance lease as per Ind AS 116, account for the sublease as a new finance lease. Okay, so new finance lease will be done. If there is any gain, any loss because of this, it should be transferred to retained earnings. And finally, what about the sale and leaseback transaction? If you have entered into any sale and leaseback transaction before the initial application, you are not supposed to do any adjustment. Really good. So if you have entered into a sale and leaseback transaction before the application of Ind AS 116, Ind AS 116 says that you will not carry out any retrospective adjustments. They are saying seller lessee does not perform any retrospective adjustments. So whatever sale and leaseback transactions that we have already entered into, whatever accounting that you are doing as per Ind AS 17, continue with that accounting. Yes, after the application date, if you are entering into any sale and leaseback transaction, then you have to apply the principles of Ind AS 116.